This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best technology stock to buy right now. Today is Monday, September 8th, 2014, and as we see here in the opening slide, this company is in the semiconductor equipment and materials industry, and we see its 12-month upside at 41.7%. Going on to the next slide, we see that the name of this company is called Applied Materials. The ticker symbol is AMAT. The industry is semiconductor equipment and materials, and we see the 12-month upside potential at 41.7%. Once again, the name of this company is called Applied Materials, and the ticker symbol is AMAT. On to the quick facts slide. Let's see. What's key in keeping in mind is that Applied Materials is an equipment manufacturer for the high-tech sector. So keep that in mind as I read the somewhat lengthy description to you, but I think you'll kind of see the value in what they do and how many different types of customers they serve. Okay, Applied Materials provides manufacturing equipment, services, and software to the semiconductor, flat panel display, solar photovoltaic, and related industries worldwide. The company's Silicon Systems Group segment develops, manufactures, and sells a range of manufacturing equipment used to fabricate semiconductor chips or integrated circuits. Its Applied Global Services segment provides products and services designed to improve the performance and productivity and reduce the environmental impact of the fab operations of semiconductor, liquid crystal displays, and solar PV manufacturers. The company's display segment offers products for manufacturing thin film transistor LCDs for televisions, personal computers, tablet PCs, smartphones, and other consumer-oriented electronic applications. The company's Energy and Environmental Solutions segment provides manufacturing systems to produce products for the generation and conservation of energy, as well as manufacturing solutions for wafer-based crystalline silicon applications. So yeah, this is a bit of a mouthful, but I wanted to read that description out to you to give you a feel for the type of equipment that they make. They make the equipment that enables the manufacture of a lot of other high-tech products. So their website is www.appliedmaterials.com. That's www.appliedmaterials.com. The headquarters is in Santa Clara, California. They were founded in 1967, so they've been around a bit. The number of employees they have is 13,700. Once again, the ticker symbol is AMAT. The sector they operate in is technology. The industry is semiconductor equipment and materials. Over the last 12 months, the annual revenues totaled $8.8 billion. The net income over the last 12 months totaled $999 million. And the cash from operations of the last month totaled $1.4 billion. So yeah, they make quite a bit of money. They're a sizable company. And their market capitalization stands at $27.7 billion. Going on to their products and services page, basically we have the logo of Applied Materials, and if you go to their website, you'll see photos of a lot of different equipment that really don't seem to mean much. And you can imagine that since this is a high-tech equipment manufacturer, that it would be tough to see exactly what these machines do, since you probably really need a microscope to see a lot of their end products. So on the products and services slide, we have some excerpts, photo excerpts from their website. Let's see. We have something that says, for the semiconductor division, our technologies enable high-performance, low-power processors and high-density storage and small form factors. For the display segment, they have a description that says, our equipment helps make thinner, lighter, and higher resolution flat panel and mobile displays. They also have some photos of just other manufacturing equipment, and you can always come to the slide deck if you'd like to see it, or go to the website, better yet. On to the metrics slide. Once again, the annual revenues for the last 12 months was $8.8 billion. The net income was $999 million, and their cash from operations was $1.4 billion over the last 12 months. The operating margins for Applied Materials in 2013, they were 15.7%, and in 2014 they have increased quite a bit. They're now standing at 23.5%. So that's a substantial increase in operating margins. Their valuation metrics, the trailing PE ratio stands right now at 32.1, and the forward PE ratio is 19.3. So analysts on average are expecting the earnings to increase substantially. The PEG ratio is at 1.8. It's a little bit higher than 1. Maybe it's getting a little bit rich. Price to sales is at 3.1. Price to book is at 3.6. And the enterprise value to EBITDA ratio stands at 15.4. The recent closing price for Applied Materials was $22.76. The 52-week low is at $15.46, and the 52-week high is at $23.46. So the stock is much closer to its high right now than its low over the past year. The 20-day moving average for Applied Materials is $22.09. The 50 days at $22.14, and the 200-day moving average is at $19.70. That relationship implies that, the latest or shortest moving average is higher than the longer moving average, meaning its price has been going up. The average daily trading volume for Applied Materials stands at 12.4 million shares per day. This is a heavily traded stock. The beta for the company is at 1.8, so that kind of implies that the stock is a little more volatile than the market. So, when the market goes up, Applied Materials tends to go up more. When it goes down, Applied Materials tends to go down more. The dividend yield for the company stands at 1.9%. This is something kind of nice to see in a high-tech company. It implies they have pretty strong financials. And the average dividend payout ratio over the last 3 years stands at 34.3%. Now, going on to the price chart for Applied Materials, there's not too much of a story to tell here other than the stock has just been going up over the last 12 months. The last year, the stock has appreciated 46.7%. The increases have been fairly steady, although they probably kind of coincide a little bit with earning releases. But at a distance, it's a relatively pretty steady increase from the low of around $15 to the high right now of around $23. So Applied Materials has been going up, and we expect it to go up some more. One recent announcement that we believe is going to drive additional share growth is that they're going through a merger with a company called Tokyo Electron. And basically that merger is expected to drive additional cost synergies, lower some of the operating expenses, and just open up additional markets for the company. There's been an ongoing trend in the high-tech equipment industry. Basically, consolidation has been going on among several companies, and Applied Materials is about to go through one with Tokyo Electron. and basically the effects, or we'll start to see the benefits of this merger starting in the third quarter. And the third quarter will end for them, and the third quarter will end for them in October, and we'll start to see those results coming out in November of this year. So those synergies and cost savings are expected to drive additional value over the next year, and is part of the reason for our favorable outlook of Applied Materials. So on to the summary page. The financial statement quality of Applied Materials right now is excellent. I mean, the amount of debt they have due over the next 5 years is $600 million, and I mean their expected profit for this year is expected to be about $1.2 billion. So I mean, the profit in 1 year could take out the debt over the next 5 years. So they're very, very healthy condition. The operating margin trend, as we mentioned, it's been improving quite a bit, or it has improved quite a bit. The price pattern trend has just been increasing. The stock's up 45% over the past year, and our overall market outlook is neutral. I mean, we're seeing, some stocks that are overvalued, some stocks that are undervalued. So we don't expect to see any particular headways one way or the other anytime soon. So the recent closing price for Applied Materials was $22.76, and over the next 12 months, we see the stock price potentially increasing to $32.25, and that implies a 12-month upside potential of 41.7%. So we see Applied Materials as the best technology stock to buy right now. So we hope you found this presentation helpful and interesting, and that's all we have for you this week, and talk to you soon. Take care. Hi, this is Mathis Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things would be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Conner Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental and technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Conner Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnerMG.com. That's www.connermg.com, or you could go to our website and you can see a presentation that compares Conner Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, a minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.